Welcome guys to another video, and today we're going to be asking ourselves, is it too late to invest in the stock market as of August 17, 2020? The stock market has been going up and then it went down as of COVID-19, and pretty much, it's back up where it wasn't or where it was in February. The only difference is that COVID is still here. And so there might be a lot of fear, a lot of confusion as to, is it a good time? Did I just miss the opportunity of my life? Is there more to grow? Is there going to be another, sellout? And so hopefully today I'm going to be able to answer some of your questions and some of your concerns, and hopefully give you pretty much a good demonstration and a good argument of helping you make that decision for yourself. So pretty much, as if you guys see the graphs, long term, it's proven, as you can see, again, these are facts. Dow Jones, the S&P 500, and the Nasdaq have been proven to only increase over time. So, stocks obviously have always been a great way to earn money, and that's why a lot of people like, investing in the stock market. It provides a very high rate of return. It is easy to enter. Like you guys can see, you could just open a Fidelity account and invest in hundreds of probably tens of companies. And it's, the only problem is the risk and reward. So there's a trade-off. The more risk, the higher the reward or higher the return. And so in this case, all you have to think of really is you need to have a plan. So you need to have a plan to diminish the risk involved in the stock market. So if part of your fear right now preventing you from investing into the stock market is, I'm going to lose my money, then we have to work in a way to say, okay, how can I diminish my risk? How can I diminish the probability of my investment going down? And the only way of doing that is diversification. Now, I know you probably have heard this a lot of times, but I'm still amazed how a lot of people don't follow through with this. And so really, diversification. So for example, Tesla has been going up ridiculously. And so I have an investment with a total of 24% since I bought it, which was in the beginning of the month. And so if I would have invested my whole $1,000 into Tesla, I would have made $240, which is much more than my $32 that I've already made, right? However, that risk would have been very, very, very high for me, right? Same thing as if I would have invested in my least performer stock, right? In this case, it seems to be Marvel Technologies, right? If I would have invested, I would have probably lost 8% of my investment. So I cannot really predict the future, and obviously nobody can. So we have to come up with a way on how can we, again, going back to that same concept, how can we reduce our risk? And so in my portfolio here, I have stocks of all types, not just technology stocks, but I have stocks in banking, I have stocks in retail, I have stocks in technology, I have stocks in all sorts of industries. So that if one day the Dow is up or the Nasdaq is down, I'm still making either no money or a little money or little loss, but never hopefully an extreme. And so that's how a portfolio becomes stable. It becomes, it grows, and it obviously gives the investor a little bit more of confidence towards the long term, because eventually you'll start seeing gains. And even though the stock market will go down on some days, you will still have gains after hard days. And so that will give you a little bit more of confidence of just seeing your money go down in value. Now, another thing is, if you were to buy in a consistent manner, so you need consistency. If you were to invest $1,000 every month, like in my case, I'm investing $1,000, I'm injecting $1,000 into my Fidelity account every beginning of the month. And so whether, I'm buying high or whether I'm buying low, at some period, maybe this week or maybe, that week, I bought high and then the market was down. And at the end, I will be happy with the average price of the indexes or the stocks. So, the indexes and stocks will tend to increase over time. And if I am able to get an average price, I'm still going to guarantee a good amount of return. And so that's why pretty much, you do have to kind of invest in a consistent way, because if you only put $10,000 worth of stocks, then you don't have any more cash to work with. You might have bought high and then now your investments are really going to go down, or you might have bought low and you made a good amount of money, but that's not a very smart move to do. So in conclusion, if you're looking for short-term investment, then stock market's not for you, at least right now. 1 to 2 years, that's the time frame you should be looking at. You should be getting, whether you have some wages and you're going to be able to put $40, $50, $100, $1,000 every week, then that's something you can start to accumulate and invest and rebuy on your stocks and grow them. But again, if you need that money within 1 to 2 years, maybe that might not be the best time to invest. However, if you do have more time, and if you're going to be investing in the long term, and again, as long as you have a plan with your diversification, with your consistency and your consistent injection of funds, and again, a well diversified portfolio, diversified enough to withstand shifts between indexes, then overall you're going to be in a pretty good shape. Now, a good way to follow a steady portfolio is following my specific portfolio. As you guys have seen, from the beginning of the month to right now, so far we have positive gains. My yearly return goal is 10%. So far we have 3.2%, which I think is pretty good. So again, if you actually enjoyed this video and if you would like to see how my portfolio keeps growing, I would encourage you to like this video or subscribe, or simply follow our series for our daily updates on this portfolio. I don't have a lot of time to actually be giving analysis on each and one of these stocks, but eventually I hope I will have enough time. And every time I upgrade or downgrade stocks, I will definitely be explaining that on the daily recap videos. So like I always do, I would just like to pretty much thank you all for reviewing today with me, my portfolio. And today was a really good day. And if you enjoyed the video, feel free to like, comment, subscribe, and I'll see you again tomorrow. Thank you.